This past 2 months, we have seen nothing but pain in the crypto space. Everything was on a downfall, including massive crypto companies like 3Ls Capital. It is a crypto hedge fund, and at one point, it had over $10 billion in AUM, but all of a sudden, it just failed and filed for bankruptcy. So what went wrong?
I declare bankruptcy!
How could the management of the company allow this to happen? In this video, I'll clear all that for you. If you find this type of content interesting, make sure you hit the subscribe button and we'll keep the videos coming. First of all, let me give you a little bit of background of what 3Ls Capital is. So 3Ls Capital, or 3AC, is a Singaporean crypto hedge fund founded in 2012 by Kyle Davies and Su Zhu. At its peak, it even backs successful projects like AAVE, Ethereum, Polkadot, and Solana, etc. It all sounds very interesting, right? Just when we thought, well, the people who are running 3AC are probably like the smartest people on earth and they have forex trading experiences and stuff. But turns out they have the biggest degens in crypto, and definitely not a very good one. You see, ever since December last year, the Fed has been raising interest rates in the hope of combating inflation. This would send a more fearful sentiment to the market because people would find risk on assets like crypto less appealing. But Su Zhu took this as an opportunity to double down on crypto with excessive leverage. Little did he know that inflation will still be 40-year record high in spite of the Fed's hawkish rate hike. We're literally in the middle of war right now, and a protocol as big as Terra Luna would fail overnight. Even as crypto veterans like Pantera Capital were unloading the stake in Terra Luna, Su Zhu continued to talk up the merits of the algorithmic stablecoin, leading some to wonder if 3AC co-founder was in fact looking to offload his holdings. In December 2021, Su Zhu bragged about the future growth prospects of Terra Luna in a tweet. In a direct quote, "We are seeing some of the earliest and most ambitious idea in crypto starting to unfold. Cross-chain decentralized stablecoin backed entirely by digital native assets was the holy grail in 2016, but not everything goes as planned." Terra Luna collapsed in May this year. Billions of dollars of market cap just went poof, disappear. Just to give you a little background, Terra Luna was founded by Do Kwon and Daniel Shin. The whole ecosystem focused on stablecoins alone, more specifically algorithmic stablecoins, and the most infamous one is no other than UST. The main reason that you stick stablecoin on the platform called Anchor Protocol is that you can earn a crazy guaranteed return of 20% APY. And guess what? 3Ls Capital stick 500 million onto the platform. Imagine earning about 300,000 every single day like Su Zhu did from staking alone. What would you do? Of course I'm gonna buy a yacht. According to a legal document filed by liquidators of 3Ls Capital, Su Zhu and Kyle Davies made a down payment on $15 million yacht, and it's speculated that the yacht was actually purchased with borrowed funds. The founders, of course, have been boasting that the yacht will be larger than any owned, even by Singapore's richest billionaires. So, just when you thought you owned everything in life, you have to give it all back. Turns out algo stablecoin is far from being stable. So far, it has only proven to be anything but stable. On 7th of May 2022, over $2 billion worth of UST was unstaked and hundreds of millions worth sold. This huge sell caused the price of UST fell to 91 cents. So everyone be like, why is my $1 worth only 91 cents now? I better get out before it gets down to zero. More and more people are selling, which also pushed UST price further down. A week later, on 13th of May 2022, the price of UST had already fallen to only 1 cent. This is also what you called as death spiral in algo stablecoins. Since Terra Luna used to be one of the top 10 cryptos by market cap, the collapse of it affected the crypto market hugely. You see, in the crypto space, everything is linked to one another. If one caught fire, it will spread rather quickly. 3 Hours Capital is one of the first crypto-related company that failed because of Terra Luna, as they put such a huge percentage of the net worth into just one project alone. According to Fatman, a whistleblower, posted on Twitter that 3 Hours Capital had bought 10.9 million locked Luna for $559 million. However, since the collapse, that Luna token was only worth $670. So what did Su Zhu do when he lost $500 million and need to pay back to his clients? Of course he's gonna take more leverage, right? Because what could go wrong? As a result of suffering losses from Terra collapse and the crypto market downturn, 3 Hours Capital was unable to meet margin calls from its various lenders, so 3AC filed for a Chapter 15 bankruptcy on 1st of July 2022 in New York. The purpose of a Chapter 15 bankruptcy is to prevent creditors from seizing a company's assets located in the US. Meanwhile, liquidation proceedings will continue in British Virgin Islands, where 3AC is based. Obviously, at this point, we have learned that 3AC just love debt and leverage, and they just can't get in love with them. According to the court documents, 3AC Capital was owed $3.5 billion to 27 different companies, including Voyager Digital. Voyager Digital is a publicly listed crypto brokerage firm. They suspended trading and withdrawals shortly before the news of 3AC bankruptcy. Because Voyager lent so much money to 3AC, it becomes Voyager's problem if the borrower is not paying the money back. That's why Voyager also filed for bankruptcy. You see the ripple effect now. Su Zhu realized that he failed massively, so he was urgently trying to sell his 34 million bungalow in Singapore. After 3AC filed for bankruptcy, the 31,000 square feet bungalow was purchased in December 2021 and was held on trust for his 6-year-old son. According to text messages circulating among property agents, the bungalow is being put up on a very urgent sale. Of course, this wouldn't be enough to pay their debts, so both of the founders are running away from lots of angry people. Previously, the court issued an order allowing 3 Hours Capital liquidators to demand the pair attend court. It was also revealed that Su and Davies were uncooperative with the liquidators. According to a legal document filed by 3AC's liquidators, there are Zoom calls with Su and Davies. However, it could not be confirmed that it was indeed them because their videos were switched off. Also, the audios was muted with neither of them speaking despite being asked questions. After 5 weeks of hiding, the founders finally came out and did an interview with Bloomberg, basically just repeating the whole thing, how they failed so massively, yada yada yada. Who knows if the founders are gonna repay all their debt? We have definitely seen the domino effect with both Voyager and Celsius filed for bankruptcy. Now everyone is just wondering if there are more dominoes to fall. So far, any companies that lend money to 3AC has been given a kiss of death. So I guess the key takeaway for this video is self-custody, because no one can just suddenly freeze your funds for some ridiculous reason. So ladies and gentlemen, there you go. This is how you turn $10 billion to zero. I hope you learned something today. If you did, please do me a huge favor and drop a like and subscribe to the channel. Follow me on Instagram and Twitter for more regular updates, and I'll see you guys in the next one.